Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today here in Europe. I'm Caroline Hepker alongside Jemana Basecci, and we're joined by Bloomberg's equities reporter Chloe Millay. Good morning, Chloe.
Good morning.
DHL shares have jumped. Why is that?
Yeah, so for DHL, profit beat estimates by a good margin. So if we dig into the segments a little bit more, we can see where exposure to global trade comes in and what kind of segments have been impacted and not impacted. So it's doing quite well because the post and parcel segment was really resilient thanks to price increases. But then the global forwarding division, which is the one that's really exposed to tariffs, was actually weighed down quite a bit by lower trade volumes. But crucially, DHL, and that's the reason why it's doing well, is because it's not as exposed to trans-Pacific trade as much as some other companies in that sector. And the ongoing kind of cost-cutting initiatives that it's started really helped, and so it maintained its guidance. So we can see the shares responding to that. We have Maersk reporting a little bit later this week, and that's still in that shipping industry. So we'll see how it's actually dealing with those lower rates.
On the flip side, Continental has missed analyst estimates, some weakness showing up in its tire division. How's the market responding today?
So yeah, for Continental, the shares are down, but it's a bit of kind of two stories, and the market seems to be responding maybe quite harshly to that weakness in tires. But the automotive business, which makes sensors and brake system, is actually in pretty good shape, and that's the one that will be spun off in September. So that division cut costs and it raised prices ahead of its IPO, which is scheduled for September, and is therefore doing quite well. But then on the other hand, the tires business, which is the business that Continental is keeping, that disappointed, and it's the problem here is that the margins are really weighed down by the costs from tariffs, and then also really strong euro compared to the dollar. But Continental is reversing its portfolio expansion and only becoming now a tires only business, but that's the division where we see a little bit more weakness. So we'll see how that kind of goes, going forward.
Okay, so that's Continental. Moving on to BP in the oil and gas sector, share price is up as much as 2.8% this morning following the earnings. Tell us more about that.
Yeah, a really big earnings beat this morning for BP, so that really much better adjusted net income than was expected. But we also have a $750 million buyback and also an increased dividend. So shares are moving on that. But they're also moving on the updates on its turnaround plan. So it said that it was cutting $900 million of structural cost, or it had cut that in the first half. And it also expects to receive about $3 billion from divestments. And it said its new chairman will conduct a review of the entire portfolio. So BP is obviously under pressure from activist investor Elliott, and that activist investor is trying to get BP to cut costs and to refocus on oil and gas. And it seems that BP is responding to those demands, and shares have moved higher on that response.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.